Auto Head Trader Penny Stocks Club 13, and this is a quick watch list video. See what we're looking at and how to trade it. Before we get started, I do want to wish everyone a happy new year. I'm excited. There's a lot going on. So I was gonna wait to go back into penny stocks, but I think it's a new year, it's a new start, and as you all know, we've been doing options. It's been going great. They're very profitable, and having said that, it's not for everyone. I understand that it's way harder to risk or to manage your risk with options. So with that, and for that reason, I decided to just go ahead and do both, have a little bit of options and stock trading so that we can target everyone in the group. So guys, I'm gonna go ahead and dive right into it. Right now we're looking at the SPY, and we do have this little ascending wedge pattern. We do have an upper trend line, and right now it's kind of pulling back, which I told you this might happen. It is a little slower than I anticipated, but maybe it can find some support at this levels here, where there was this rejection here, this rejection there, and this rejection here. So we'll be looking at this zone for possible support and a continuation higher. So this level here, might be something that might become a demand zone. You also have the 20 EMA, the 9 EMA right here, that might be possible support. We'll keep an eye on it. We'll look at the news, see what's going on, and we'll take it from there. But for now, that's what we see. That's what I see in the SPY. So let's go ahead and look into the options. Let's go ahead and go with Ford right here first. So Ford, guys, just a good upward trend right now. Upward trend. It consolidated, traded in this channel. So this is what I'm looking at, guys. So we have this little wedge pattern forming, and we do have this previous channel, right? So the top trend line in the channel might become support, and by that I don't mean this particular price level. Support can, it can go below the price level, and still, that level will still be considered support. So we can look at it as a zone, right? We have this supply zone right here, which can become your demand zone, where buyers come in and take it higher. We are looking for the break of 21. That's the key level that I see right now. A move up to 22. Why only 22? Well, because previous history has shown us that this one is a slow mover. It tends to move slowly. So we're gonna trade it understanding its behavior, understanding how its heartbeat is on Ford, and it's kind of slow, guys. You don't see big candles other than this one. So we're gonna go ahead and continue trading the way it trades itself, so that we're only looking for that $1 pop. That $1 pop in options, guys, can be quite significant. So that's what we're looking at in Ford. Alcoa Minerals, we have this little upper trend, upper channel, guys, and what we can look for is to buy either here at the trend line and sell at the upper trend line. So we got this little I want to say like a scalping opportunity, but with options, guys, it's really good move, will give us some very good returns. So we'll look for that in AA. Then we have UPS. So UPS, guys, broke this upper trend line, ton of breakout, bounced off of the 9 EMA. So I like that. Now we're looking for a continuation to the upper part of this trend line here, which would be the 220.24 level. So hopefully we can get somewhere there. I would say the sell zone, if this does work out, would be right before it gets there. Like always, you want to be dumping, because if it gets rejected, then you're gonna end up either with a loss or break even. So you want to take profits if it works out. Entry level here, I would say the upper or the rejection in this candle. So if you go to the 1 day 3 minute, the supply zone here would be our entry. Just for good measure, we want to see the break of that level, right? and let's go to the 5-day 15. So I would say that that'd be good. We have this bounce here, and this is just after market hours noise, so I wouldn't look too much into it. Again, it all depends how it opens up. We still need to see where the market is going to open up, and from there we can make a more informed decision. So that's what I'm looking at in UPS. UPS. Then we have Lcid. So we had this upper trend line broke out, and now it got rejected up at around the 20 EMA. We do want to see a little bit of a flag pattern after this, maybe trade sideways and then continue moving upward. But let's go ahead and break it down a little more. Let's go to the 20-day 1 hour. So we can see this wedge pattern here. It broke above it. Now we want to look for a level where it can hold some support. And if we look at this, you got support there, and then buying pressure. You had resistance, right? And that's where it stayed. So that's an important level. Let's go ahead and mark it. So there you go. There's your support, resistance, resistance. So you can see how that level is kind of important, and that's where it's at right now. So if we look trading this as a little flag pattern, right? We got our mini flag here. Then we would want to see that breakout and that continuation upward. So right now, if it stays within this would be your buy zone where you might want to take a position as it's breaking out, and we'll look for Lcid, a good trade in it, hopefully Monday or sometime this coming week. Now let's go ahead and move into those smaller caps. So let's go ahead and go with ABCT. ABCT, we have a wedge pattern here, guys, and we want to look for that breakout. I want to say an entry right here around the $2.60 level to the upper rejection of this wedge pattern. That would be about a 20% gain. We do get something bigger, it would be even nicer, 54% all the way to the 180 SMA. There's a good opportunity here, a lot less riskier than options, guys, and you can go in with a lot more sizing, with a bigger position sizing with penny stocks, which is quite nice because now you don't feel, you can trade a little more comfortably, right? So that's what I'm looking for in ABCT. We do have this wedge with decreasing volume. So on the breakout, again, we're looking for that volume to come in as it breaks out and continues moving higher. ENC, we just got this little cup and handle forming. So we're looking for the entry in previous candles high around the $5 level, and I would be comfortable with a move to the $6 level here, guys. Whole dollars, remember, they become psychological support and resistance. So if it does break out, we have an opportunity to make, or not a breakout, but continue forming that cup and handle, right? Or that handle at this point. That'll be about a 20% return, guys. It does make bigger moves. So if we look at this candle, we get that kind of candle here. It does have a chance to go all the way up to 7, where the 180 SMA will act as a resistance. But 20% in a stock, guys, that's quite a return. So locking in profits, it's always important as a trader. So you gotta stick to your profit taking target, and you gotta stick to your stop losses. That's all I can say. I'll keep repeating it because risk management is key if you want to be a successful trader and you want to be in it for the long run. So that's ENC, ENSC. We also have NEW. So NEW had huge volume, decreasing volume. So what are we looking for here? What do I see? I see this pattern right now, the ABC D pattern, right? So you got your A, you got your B, which is your sell. Now you got your C, which is your second buy, and now we want to sell up here, right? So how do we trade these patterns? If they are gonna work, let's go ahead and go to the 5-day 5-minute. You would want to buy in the previous, or the first candle to make a new high, right? So we're looking for the previous day's resistance at the 43, 44 level, somewhere here. Okay, so this would be your entry for the first candle to make a new high after this pullback right here. So now we're looking for the breakout out of this ABCD pattern. You can take profits at the high of the pattern, which would be around the 70-cent level, and that will give us, if it works out, ideally on a perfect trade, that would give us a return of 56%. Wow, that's a lot. I know we've had some of these moves quite a few times with penny stocks, and this might be one that will give it to us. It might not be a one-day trade, it might be a 1, 2, 3 day swing, but as long as we understand how to trade this, we enter here and we can give it about a 5-10% cushion. Anything below this level here, I would sell. So if we look at the risk to reward ratio, we're risking about, I wouldn't risk 13%, I would risk to the 40-cent level. That would be about an 8% risk for a 56% return. Wow, guys, I mean, I haven't traded this in about 4 months, and the risk to reward ratios are ridiculous. I like them. I think trading both options and stock is gonna be tremendously a way to get some more opportunity out of investing in the market. I am excited and I'm looking forward to getting some of these returns going with you guys. So let's go ahead and get it done. I got one more for you all, Spcb, and there was more, guys, but I kind of handpicked the ones that I think have the better opportunity to get going. So this one's an oversold pattern, and the trend continues to go downward, but we've seen this attempt to reverse, failed. We try to see it again, or we're seeing it here again. This might be the point where it takes off. So again, I would go with the same idea here. I wouldn't want to buy low as it's coming back down, because you know the pattern here, right? We know that it tends to just, if we buy down here, then we're going to be selling down here and continue the trend going lower. So we don't want to see that. I would want to buy the momentum upward. That's what I would want to see. So here my idea again would be to buy on a candle, the next candle, to make a new high, which would be the break of this level, which would be the 65-cent level. If that works out, we can see maybe the 80-cent level for profit taking right below this so previous support level. It's actually a little more. I would go with the 83-cent level. What kind of return would that give us? Let's go ahead and check that out. So we enter at the top of this candle here. That would be about a 25% return, guys. Even to the 80-cent level, that's 20% return. Again, no need to be greedy. Small wins add up, and the losses, as long as you risk your 5-10%, that should be good to keep you in the game long enough to understand how to trade, how to enter, how to exit. But you need to have that risk management. You cannot deviate from it, guys. You just gotta let the losers go. Don't force them. Let the runners run. Scale out like we always do, and we're gonna continue making some good returns in this new year, guys. So I'm excited. Let's go. See you in the next one.